And it's great to have you join us for our weekend capital market show right here on Channel Television. It's great to have you join us and sharing your weekend right here with us. And we'll take a look at how your money performed this week. I'm Ladi Williams. Let's begin the show with a quick review of major global stock markets performance at the end of the week. Major global stock market indexes closed Friday session negative across board as a rally that carried a broader market in recent months appeared to run out of steam. In the United States, the Dow Jones Industrial Average fell by 0.65%, while the S&P 500 slid 0.77%, while the Nasdaq Composite closed lower by 1.01%. In Europe, the UK's FTSE 100 index fell by 0.54%, while Germany's DAX index closed the day down nearly 1%, while France's CAC index ended the day down by 0.55%. It's also a negative close across the Asia-Pacific region as Japan's Nikkei 225 ended the day down more than 1%. Shanghai Composite Index lost 1.315%, while Hong Kong's Hang Seng Index dipped by over 1.7%. So we see it's a gloomy outlook there for most of the global markets we track. But back home, Nigeria's equities market managed to record a 0.34% weekly gain after ending the last two trading sessions in the red. This comes after bargain hunting for the shares of industrial giants BUA and Dangote Cement, as well as some other high-value equities, counter the impact of sell pressure within the week, driving the all-share index way above the 59,000-point level. At the same time, sectoral performance ended with positive sentiment across board, particularly on the insurance as well as the oil and gas sector index of the market. Skyway Aviation led a pack of 61 gainers, up by over 44%. Jai's Bank topped 35 losers with nearly 19% decline, while the trio of Universal Insurance, UBA, GTCO were major contributors to more than 3 billion shares traded within the week. And Nigeria's commodity market is gradually gaining traction as more products have been listed in some of its trading platforms. Recently, the Lagos State government, in partnership with a private company, announced the launch of the Eco Rice on the Lagos Commodities and Futures Exchange. To shed more light on this now, joining me is Mr. Akin Akeredolale, MD CEO, Lagos Commodities and Futures Exchange, joining me via Zoom. Great to have you, and thank you for sharing your weekend with me.
Thank you very much, Daddy.
Yeah, so definitely we're seeing some traction now with the commodity market, but tell me about the challenges faced by commodity exchanges in Nigeria and what steps can be taken to overcome them.
Okay, I think for every ecosystem, for every country, the first thing I look at is the legal framework and the regulatory framework. We still need to sharpen the regulatory framework and the legal framework to be able to support the commodities ecosystem, support the commodities exchanges. And I would want to thank the Director General of the Securities and Exchange Commission. They're putting together the review of the ISA, which has passed in the third reading. I think it's waiting for the presidential accent now for us to put it in place. When this particular bill is put in place and there's accent to it, and the commodities ecosystem, the commodities exchange, we're able to try it better. The global community will be able to rely more on it because then there's a legal backing, there's a strong regulatory backing in place there. And also the private sector, the capital markets will be able to start participating in that space. So from the angle of a policy and a regulatory framework, yes, that needs to be improved. That's one of the challenges. And also on the issue of paradigm shift, whereby the whole of Nigeria has been used to the OTC position of trading in commodities. Putting the structure into it is something that people are gradually getting to know. And the banking sector, the finance sector too, they're now looking at the commodity ecosystem because before they had this fear of sectoral risk to participate and to fund that particular space. But with the commodities ecosystem coming up now, the exchanges coming up now, they are getting more freer to be able to participate in the ecosystem. That is from the liquidity point of view, capital injection point of view, and the off-take point of view.
And can you paint a picture for us how domestic investors are warming up to the commodity exchange?
Okay, I did not get that point again, sorry.
No, I said, can you paint a picture of how domestic investors are warming up to the commodities exchange? Are they excited about it?
It's a very, very large market, and we thought it was large but we later realized that was very, very large. The day of the commission and of the Lagos rice, there was a place, there was a trade that day of about 5,000 contracts that day, out of the blue there. And I was shocked that people wanted to participate at that level. The investment community will be making overtures that PENCOM also, we had 3 meetings with them, pensions, PENCOM for the PFAs to be able to start looking at that commodity ecosystem. They've started looking at the gold as one of their first steps that they're going to look into, and they want to participate in that space. And the retail investors who have been inundated with various participants that want to participate in the commodity space. You cannot imagine the volume of capacity Nigerians have, their way of investment appetite to be able to participate in the ecosystem. Between Friday and Wednesday, when we launched that particular by Lagos State, the volume of traction that has gone on in the last 2 days has been very, very massive. And we believe that as the retail investors come in and other participants come in, we'll be seeing more traction in this space.
You mentioned, policy measures there, for that market, but can you be more specific about what kind of policies you'd like to see, from the federal government, to stimulate activities within that ecosystem in Nigeria?
You see, the first thing we must agree and accept is that Nigeria is a commodities country. And then we're talking about a country that's like, people are saying that we're the 27th largest economy. Some people say we're 17th. I think other countries that are bigger extract a lot from Nigeria for them to be in the position that they are. And Nigeria's policies has to be in place. One of the things that needs to be done is that bill, the ISC, needs to be passed, because there are certain things that defines what commodities should be there. And the participants, we have the warehousing issues there. We have the collateral managers issues there. We have the certification issues there. These are things that the global space wants to see for them to be able to participate in Nigeria's commodities ecosystem. The federal government also should. We have 200 million people in Nigeria that will feed every day on commodities. There should be offtake agreements, there should be guarantees to support the commodities ecosystem, the commodities exchanges. It's not as if at the end of the day, these guarantees will crystallize because 200 million people will consume every day. The other part of the commodities ecosystem that's key is the issue of logistics, particularly the rail system. Because for every commodity that you see, a better part of the pricing and the premium that go on the pricing has to do with haulage. We need to look at how we handle haulage there. And the federal government should look at the issue of ratification of commodities trading on commodities exchanges. We have a lot of leakages in the commodity space in Nigeria. We have a lot of losses by way of revenue that federal government should be making that can track easily if they pass through the commodities ecosystem. These are the things that needs to be done there. Then the issue of port efficiency, because a lot of Nigerians want to participate in the export space. They want to export shea butter out of Nigeria. They want to export cocoa powder out of Nigeria. They want to export cocoa beans out of Nigeria. They want to export lumber. There's so many things that we want to export. So the efficiency of the ports makes it easier for these people to participate. And we're talking about things that can generate foreign exchange for Nigeria. And when you see 200 million people participate in a particular ecosystem, you can imagine the impact of what we're going to see there. These are part of the things that we look up for the government to look at. And also on the issue of tariffs, for people that are doing export bounties that are going to bring forex into Nigeria, we should look at the tariffs. They should be friendly, they should be competitive, so that other countries around Nigeria don't take the advantage of our own tariffs being higher than theirs, which can affect export. And lastly, for one of our assets that we launched about 8 months ago, which is gold, I think it's high time that government should look at how do we remove tariffs on gold that's coming into Nigeria. Because there's no reason why we should have a tariff on gold that's coming into Nigeria. All over West Africa, there's gold everywhere. There's gold in Nigeria. And Nigeria has the capacity as one of the largest economies in this space to attract the gold to Nigeria and let it sit in Nigeria and stay in Nigeria. If we have this tariff off, we'll see gold coming from everywhere. It will be cheaper for Nigerians to keep and buy as way of investment. These are part of the things that we need to put in place to activate our own economy in Nigeria immediately, to build up on our GDP immediately, to grow it immediately. We consume salt, is a commodity. We consume sugar, is a commodity. We consume rice, is a commodity. We have cars that are using tires in Nigeria, is a commodity. The commodity, when I say tires in Nigeria, for you to produce tires, for example, you need what we call the carbon black. Carbon black is a derivative from refining crude oil in Nigeria. We have crude oil, we have fertilizer that can be traded. We have gas that Nigerians can participate in. So all these things require a lot of these policies and not stringent measures that will allow investors to participate, and at the same time for Nigerians also to participate at the retail level, which is very, very key to building up the ecosystem. The retail is very important, then the middle class will come in, then we'll have a very big economy there.
Yeah, so many commodities you did mention there. But let's talk about the commodity board now. I know the government did talk about coming up with a commodity board to help that commodity space, but it's not something you are fond of. Tell us why.
What I'll just say straight is that I'm not against the commodities board coming up. We'll just explain the efficiencies that the commodities exchanges and the commodity ecosystem will bring into what we're doing. You see, it's just like telling the banks now that they should be opening more branches in Nigeria. When banks are moving towards digital banking, they're moving towards internet banking, now so that they should be opening branches. If you have commodities exchanges, they're going to bring what we call the financial integrity to the market. It's very, very key for people that want to trade from international space. They want to see integrity. And the Commodities Exchange and the Securities and Exchange Commission have been able to establish suitable clearing system in place for this. We have a clearing system that, for example, the CSD, which is the Central Securities Clearing System. We have the NG Clear that is set up, which is supposed to be a CCP for derivatives and commodities. These structures are in place for us to work. Now, if you have commodity boards alone, the commodity boards, what they do is they aggregate commodities. But what we are talking about is there an exit strategy? Are you creating a structure whereby the private sector can participate? Are you creating a structure whereby the capital markets can participate so that there will not be every time going back to the government to on-budget transactions before activity can take place in the commodity space, whereby the federal government will have to be financing? Why do we just create a structure and embrace the commodities exchanges whereby capital mobilization will be done, capital raising, and the structures are already there, they're working. That's what we did for Lagos State. For example, what the Lagos State did, instead of putting about 30 billion down for a rice mill, is being mobilized from the capital markets, the private sector, and it's working. It means that Lagos as a subnational can focus their assets on other things. And those are part of the things that the commodities exchanges are doing. And the structure and the regulatory framework by the Securities and Exchange Commission have been put in place. We have commodities exchanges in place that can do this. Also for wealth distribution and off-takers, whereby we don't have the issue of post-harvest losses again. The moment you have an off-take arrangement whereby whatever is being produced by farmers, there's an off-take arrangement and there's capital injection in place to take it over. I think it's better than just focusing on the commodity board, whereby aggregation will be the order of the day, but create more of a linkage to the private sector. On the issue of standardization, the regulation of standardization and certification is being put in place by the Commission. Effectively, the certification agents, companies that are global players are now participating in the Nigerian space in certification and standardization for Nigeria. We have SON working also to give standards. All these things have been put in place. I think the best thing for us to do by way of recommendation is let us build up these commodities exchanges, grow them, and then empower them. And one of the major things is that ratification must be done on an exchange for every transaction that takes place in Nigeria. Then you have a data center to be able to harvest data of what activities going on in Nigeria. You'll be able to predict the next economic line cycle in Nigeria, and we'll be able to grow the space in Nigeria. Also, for the private sector, the capital markets and the private banks and all that, they will rather deal with private sector institutions than government when it comes to certain things, because they always assume that there's a sectoral risk in agri space and some other spaces. But the moment they know that they are dealing with fellow capital market regulated or private sector regulated institutions, they find it easier to participate. We've spent almost like 9 months now engaging with PENCOM, for example, to convince them that the PFEs that have about 13 trillion under assets that they're managing should be able to put some in the commodity space to create activity in our country with our money in that particular space. Now, the pension funds will be looking at what financial structure do you have in place? What financial arrangement do you have? What's the integrity of your markets? What are the clearing systems? What is integrity? Who are the players? Who are the professionals in it? All that have been embodied into the commodities exchanges via the Securities and Exchange Commission. So it makes it easier that the government hits the ground running with the structures that are already on the ground. By way of physical infrastructure, by like warehousing and co, there's enough already on the ground for us to work with. All we need to do is the enabling environment, the regulatory framework in place, and of course the off-take part of it that when people produce in large volumes, there should be an exit strategy. If the government is saying that, okay, but one of the off-takers in it, then it makes it easier for the financiers to participate in it. At the end of the day, it will not crystallize there. So those are the things that we need to look at on the issue of the commodities boards, and instead of hitting the ground running immediately by engaging the commodities exchanges immediately. It's very critical. We have not just agri products that we need to activate in Nigeria immediately. We have refined products that we can activate. Right. We have salt we can activate. We have fertilizer we can activate. Yeah, so there's so much. It's not just about agriculture.
Right.
Yeah.
And I'm sure as the space, gets more attractive, then institutional investors will also, chip in there. But we'll continue the conversation, right after the break. We're talking about leveraging the commodities ecosystem right here in Nigeria. And I still have with me Akin Akeredoluwale, MD CEO, LCFE. We'll come back and continue the conversation right after this break. Do stay with us. This is Capital Market. Welcome back. So watching Capital Market live on Channel Television. We've been talking about Nigeria's commodities ecosystem, leveraging, that market to push that market forward, and also, agriculture in Nigeria, pushing that sector and getting more people, fed in Nigeria. Food security, that's also a big one, and how commodities exchanges play into all of this. I still have with me Mr. Akin Akeredoluwale, MD CEO, Lagos Commodities and Futures Exchange, still with me via Zoom. Thank you for staying on.
Thank you very much.
So definitely, for the commodities exchanges to work, agricultural sector definitely needs to fall in line. What actions can you recommend to the government to make sure that the agricultural sector actually aligns with what's happening with the commodity exchanges?
For the agri sector, you must realize that the agri sector is about the largest engager of labor in Nigeria. It engages a lot of Nigerians, one. And by way of GDP also, it contributes heavily to a GDP in Nigeria here. And then one of the things that we need to do is that our agri space is still living in past glory. What I mean by that, in reality, is that if you go out there and go and look at our cashew plantations in Nigeria, some of them are 40-year-old plantations, 30-year-old plantation, etc. If you go into the cocoa plantations, you see 30-year-old cocoa plantations. If you go to shea butter in Niger State, you see the same thing there in that particular space. If you go to for shea butter and all this space, there has to be a time when the government will start looking at, okay, we know that the commodities ecosystem drives the manufacturing sector. And so far, the manufacturing sector has not been driven by the commodity space. It means that the manufacturing sector will rely on importation of commodities. And as long as you rely on the importation of commodities at a particular price, it will determine the outcome of whatever product you make from the manufacturing sector. So it's high time now that we start looking at how do we create instruments around agriculture in Nigeria. We have what we do, but we have what we call the stabilization securities that are issued regularly by the federal government of Nigeria. There's nothing wrong for the federal government to start looking at how do we issue instruments that have underlying, which are more of like agriculture, that are tradable, medium term, long term. Because there are some products in Nigeria that are medium term to long term that most private sector people, because of the medium to long term arrangement, will not want to participate in. There are some that the banks will not want to participate in. For example, you want to deploy an oil palm plantation. Palm oil is high quality, is very, very expensive in Nigeria. But how many investors are ready to wait 3 years before it starts producing? We need to look at how we're going to do. We need to look at how we're going to be able to create this environment whereby there are instruments that have agriculture as underlying, that are issued by the federal government in Nigeria, that are tradable on commodities exchanges. That is one part of it. The second part of it is the offtake, to make sure that at any point in time, when farmers produce, there's liquidity and there's an offtake agreement for them to be able to exit. It's not only the private sector that will be able to participate in this. The government should be able to work with the commodities exchanges, with the Security and Exchange Commission, with the private sector to be able to participate at the capital markets. You will discover that when these structures are in place and there are investment outlets for this, agri will be easier. The banks will be able to start. The banks have, for example, the exposure to the agri space is about 5%. and it's because of the sectoral risk. But when they see that the risks and they put their monies in, and there's an exit strategy whereby they're able to exit, then they'll be able to deploy more resources to that space. When the banks put in their short-term monies, then some of these instruments will be able to refinance these short-term monies into medium-term. Then all of a sudden you discover that as a commodities country, as an ecosystem that we're trying to build, an economy that we're trying to build, Nigeria overnight, the commerce will change. And the wealth distribution that goes to the commodities exchanges will go to the middlemen, will go to retail, to the average farmer in the bush, because one of the things that the commodities exchanges does is price discovery for the common man on the farm, and also assist and protects them from post-harvest losses in the market. When you have this in place, then we'll be able to start looking at how we're growing that commodity space. It's a structural thing by way of financial infrastructure than just the physical aspect. If you want to talk about physical infrastructure, we have enough physical infrastructure to support agriculture in Nigeria for now, at least in the next 6 to 9 months.
All right, let's talk about the recent listings on the exchange. Now, we know the governor, Babajide Sanwo-Olu, did launch the Eco Rice contract. Tell us the significance of this launch.
You see, the major thing about the Eco Rice launch is the fact that we are seeing a subnational that is ready to submit to the private sector for there to be transparency, for there to be proper structured approach to what administration, what they're doing. What is being done for the Eco Rice is basically the private sector, like the capital market, funds the paddy rice, which is almost like the raw materials, and at the same time creates the exit strategy of selling the head rice, which is the product from it. And what now happens is that aggregators, farmers from all over Nigeria, from the 6 geopolitical zones, are putting together their paddy, and they know that there is a place that when it gets there, they will get paid of whatever, and that means that they can go back to the farm easily. And there's an even price, there's a price discovery, a two-way code for them to know that this is how much this particular asset is going for, whereby no middleman can cheat them, and they will be able to get the value. And at the same time, for the other part of it, which is the head rice, you now have a situation whereby there's even pricing for the head rice. There's no case of some people hoarding it, or some people putting it aside and creating different pricing for it. So it's a pricing mechanism that's very key. The structure that creates a cycle whereby people can go back to the market and have a complete cycle in the value chain of rice value chain. That's what Lagos State has done. And we're very, very happy with that particular engagement with the subnational. The good thing about it is that we're expecting that some other subnationals will emulate this, because if you remember, if you look at the very Lagos is a small state, it does not have agrarian land. But what they're doing now is that they are trying to position themselves as the financial hub for Nigeria and the market center for commodities in Nigeria. We have Niger State that has so much agrarian land, and there's a lot of potentials there. We have Kano, we have Kogi, we have so many places that are going to be participating in this space for different assets. Now everybody's looking at this particular model that Lagos State has put in place, and I'm sure that people will have started their meeting.
I'm sure other states,
the day of the launching.
Yeah, I'm sure other states.
And the day of the launching. Yeah, I'm listening.
Yeah, I'm sure other states, other subnationals are watching at this time, but we're running out of time now. But before I, let you go, I want you to quickly tell me what you're doing to attract, youths, on this exchange to come and trade. What are you doing for technology to make sure people can just go on their phone and just, execute trades?
That's one of the things that the kudos I will give to Lagos is as a subnational. Part of the mandate when we're engaging was that 25% float of whatever is tradable on the exchange must be pushed towards the retail investor. And if I want to categorize the youths, I'll categorize what some of them under the retail investment category there. We are creating options for them. And we have some institutions that have come up on what we call tokenization. Tokenization is to be able to break these various asset classes into smaller bits that the youth can participate, and they can. And we have deployed technology that allows them to be able to trade through the dealing member firms from wherever they send their mandate in, to be able to participate in their own space and grow them. And also in participation with the Security and Exchange Commission, we were working on what we call the financial literacy also, to be able to create that program whereby the youth can understand how to participate, how to save, and how to invest in the commodities ecosystem.
All right, we got so much we're doing there, but we'll keep watching this space to see how it grows. And I do wish you the very best. Thank you so much, Mr. Akin Akeredulale, MD, CEO, Lagos Commodities and Futures Exchange. It was great having your perspective today.
Thank you very much.
All right, so there it is. We're talking about the commodities ecosystem right here in Nigeria, and there you have it. There is possibility, there is profit, you know, in those markets. We'll definitely be watching how it plays out right there. Thank you so much for watching. Don't forget, join us same time next Saturday. You can watch this again on our YouTube channel. Just flip over to YouTube, search for Channels Television, click on our videos. You can watch all our productions. Thank you for watching. I'm Ladi Williams. Bye for now.